Hey everyone, and welcome back. So today I wanted to briefly go over the debt ceiling situation in Congress and its possible implications on the market. But before I get into that, I wanted to give a quick update on the reverse repos. For those of you that have watched my previous videos, you are already familiar with this topic, so let's get right into it. This is the chart for the reverse repos on a daily basis, and today we reached a new all-time high of $1.365 trillion in reverse repos. And we have not dipped below $1 trillion since August 11th. So it's been about a month and a half of consecutive $1 trillion plus reverse repos. Absolutely insane. And I strongly believe we can go much higher here for many reasons. One of them being the Fed just recently increased the cap from $80 billion to $160 billion per counterparty. Why would they do that if they didn't anticipate that these counterparties would make further use of this facility? So that's just one of many reasons. But again, I strongly believe this can go much higher. And again, like I've mentioned before, the higher that this goes, the more pressure there is on the Fed to do one of two things. First, raise rates, taper. Second, let rates go negative. However, it seems that the markets have already decided for the Fed that they're going to go down route number one. And that's pretty evident when we look at yields. Look at the 2-year yield. It's reached its highest point since March 2020. What about the 5-year? It's reached its highest point since February 2020. If we look at the 10-year, it's also spiking up, and then the 30-year is also spiking up as well. So the markets are already acting as if the Fed is beginning to taper. Funny thing is, the Fed hasn't even begun tapering or raising rates. They just mentioned that they're going to pull up the schedule a little bit, and they plan to finish tapering by mid next year. Which is funny because I didn't even realize they started. I don't even know how they could do that. But the markets are taking that and just running with it. But the Fed hasn't even done anything. That's the point. The markets are so sensitive now and so over leveraged that even the mention of tapering and raising rates is now equivalent to tapering and raising rates. So it's going to be interesting how all this unfolds, but it's not looking good for them. I mean, we've known for a long time that the Fed is backed into a corner, but it's now playing out in reality. So, I mean, again, it's going to be really interesting how these months unfold here. We'll just have to see. Now, another reason why these reverse repos are spiking, besides the fact that it's the end of the quarter, is because the Treasury is not issuing any new treasuries because of the debt ceiling. It hasn't been raised yet. But we know that the Democrats, they're not having any luck persuading the Republicans to help them with that. The Republicans are telling the Democrats, you have to raise the debt ceiling on your own via budget reconciliation. That is how the Republicans are proposing the Democrats do it, but the Democrats are saying, no, that's not how we want to do it. It's going to be more complicated if we do it that way, and it's going to be more time consuming. Let's just do it together. But again, the Republicans are saying no. And then Yellen comes out today and says they have approximately until October 18th with their extraordinary measures to keep the government funded. However, if we don't get any additional stopgap funding by midnight of this Thursday, September 30th, then we're going to have a government shutdown effective 12:01 a.m. on Friday or October 1st. So that's clearly not something we want, but we literally have the perfect storm. Now, again, the debt ceiling itself is not the issue. We know it's going to get raised eventually. It always has, always will. The problem is when. And like I said, there's a perfect storm. There's 3 points to this perfect storm. The first point is that midterms are next year. Democrats don't want to raise the debt ceiling by themselves because they don't want to look bad. I mean, it's a lot of money that they're proposing to spend. And if they do it by themselves, they raise the possibility that they're going to lose some seats in Congress to the Republicans in the midterms next year. Second point is Biden is proposing spending so much money that it's not only the Republicans that are uncomfortable with it, it's Democrats too. So there's a lot of discord even within the Democratic Party about all of this spending and how it's going to get paid for. So there's that. And then the last point, Manchin and Sinema. If you don't know those names, You better remember it because it's really important. These are two Democratic senators, but they're moderates. They're not really with this whole $3.5 trillion in spending, and they're not really that happy about raising the debt ceiling either. So they're kind of a thorn on the progressive sides because without them, they can't even pass the debt ceiling increase on their own, which they need all 50 Democratic votes in the Senate to do via budget reconciliation, which is why Biden has been asking for personal face-to-face meetings with Manchin and Sinema, although it seems that those meetings have really gone nowhere. So because of all these factors put together, it's looking like this debt ceiling fight is going to be a lot more complicated than initially thought, and it's going to drag on longer than most anticipated. And the longer it gets dragged out, the more volatility there is for the markets and the more downward pressure there is for stocks, bonds, you name it. So it's not looking good. The last time this happened, markets corrected about 17%. We could see similar or even worse correction in the markets because of this, especially since the fact we're a lot more leveraged and there's a lot more risk in the economy now. So I do anticipate a lot more volatility on the way and a lot more trouble. We'll just have to keep an eye on the situation. Lastly, there's been news regarding two of these Fed members, Kaplan and Rosengren, and it came out around September 7th that these two individuals, alongside some of these other Fed members, were actively day trading stocks last year. You know, that might not sound as bad until you realize that these are Federal Reserve members. These people determine monetary policy. They basically determine how the market's going to react. So if you're making monetary policy and you know ahead of time how the markets are going to react to that, you can position yourself to profit off of that information, which is essentially insider trading. Make no mistake about it. If you or I did what they did, we'd be in jail. But these guys, they can kind of get away with it and say, oh, sorry, we're going to sell our individual stock holdings. And I mean, some of these included Tesla, Amazon, Marathon Oil. And I mean, some of these trades were in excess of $1 million. But since they're Federal Reserve members, they get to sell like at the top of the market and they get to retire, which they announced yesterday, just hours apart from one another, that they were going to retire months ahead from when they were actually supposed to step down or when their terms ended. And as much as that is upsetting to me, the main point I want to get across with that is, did them selling mark the top of the market? Because again, if we take a look here, like I mentioned, this came out September 7th and this is September 7th. So before this, it seemed that almost every single day, the market just kept grinding higher and higher. And around here, we were just making new all-time highs every single day, it seemed. I think the streak was like 7-8 days in a row. It was absolutely insane. But this is September 7th, and ever since then, we have not made a new all-time high. We have just been going down, down, down. It's been a little up here, dead cat bounce, and then down. So it's been about 3 weeks since we made a new all-time high, which is very strange, and we broke the trend line. Like, this broke the trend line, so the technicals are broken as well. Which begs the question, why did they sell then? And did they know something? I mean, it seems a little too coincidental that they sold near the top of the market and the markets haven't made a new all-time high. They haven't been behaving regularly as they once used to. You come to your own conclusions. However, with all of this said, there's going to be a lot more volatility in markets, it looks like. That is it for me. If you guys have any questions or comments, feel free to reach out. Please like, share, and subscribe, and I will see you all in the next one.